If you're new to swing trading and you feel like you're constantly late to the moves and that you're buying stocks after they've already run or jumping into charts that look good but somehow never follow through, chances are you're not using a defined process to find stocks before they make that real move. So today I'm going to walk you through one of the most powerful and time-tested tools in swing trading, the Weinstein Stage 2 Breakout Scan. This is how you can stop chasing charts and start letting the market bring the best opportunities to you. Welcome back to the Learn to Swing Trade the Stock Market podcast. I am your host, Brian Montez, founder of the Disciplined Trader Academy. This is where we help swing traders build consistency, confidence, and a repeatable process without overtrading, over leveraging, or overcomplicating things. Now, why do most new swing traders struggle? So let's start with the problem first. Most new swing traders scan the market like this. What's up with the markets today? What's making new highs? What's making new lows? What's trending on social media? That approach will almost guarantee that you will buy overextended charts, you will chase momentum late, you will FOMO into things, and you'll enter trades with a very poor risk to reward ratio. Professional swing traders don't scan for what has already moved. We're scanning for what's getting ready to move. And that's where the Weinstein Stage analysis comes in. So this is one of a few scans that I use, but in an effort to not muddy the waters, I'm just going to talk about the Weinstein scanner today. Now, what is the Weinstein Stage model? So from a high level, the Stan Weinstein, when he developed this, he broke the market into 4 stages. And there is a podcast that I did just a few weeks ago on the 4 stages of a stock cycle. And this is where it comes from. It's from Weinstein when he developed it. Stage 1 is basing or accumulation. Stage 2 is advancing or uptrends. Stage 3 is topping and distribution. And stage 4 is declining and downtrend. Right. So from a swing trading perspective, you want to make sure we can't trade all 4 stages. Even if you're doing long-term investments, you're not buying at all 4 stages, right? You don't want to buy a long-term investment if it's already into stage 3, and definitely not if it's into stage 4, right? You want to start getting into the stocks when they're coming out of stage 1 and take advantage of the stage 2 momentum. We focus on stage 2 because that's where the trend starts and that's where money is made. At stage 3 and stage 4, that is where the institutions start selling their positions. That is where they start using us, the retail trader, to liquidate their profits in their positions. So, unfortunately, retail traders have a history of buying at stage 3 and stage 4. We need to be buying at stage 2 and riding that uptrend with the institutional money. So it's important that you really understand stage 1, stage 2, stage 3, and stage 4. Now, what exactly is a stage 2 breakout? A stage 2 breakout happens when a stock has spent time building a base in stage 1. It breaks above that base and a new uptrend starts with strength. This is the sweet spot for longer term swing trades. You're early enough for big upside, there's clear structure for risk management, and you have strong participation from the institutions. And the best part, you do not need to predict anything, you just need a clean scan. Now, the Weinstein Stage 2 Breakout Scan, I'm going to break it down for you step by step. Let's walk through how this works in reality. Number 1, price has to be above a rising 30-week moving average. This is a non-negotiable. That is, it has to be rising above a 30-week moving average. A true Stage 2 stock is trading above its 30-week moving average, and that moving average is flattening or starting to turn up. This tells us that the long-term trend is shifting and that institutions are starting to accumulate. If the price is below a declining 30-week moving average, it's no longer a stage 2, period, end of story. Second aspect, a clean base structure. You are going to want to see a base that has sideways consolidation, tight price action, and no major breakdowns. Think cups, flat bases, or ranges that show compression, right? Sideways movement that starts to show some compression over time. This is the market storing energy. Messy bases lead to messy breakouts. We want clean compression. We want clean consolidation because that builds the energy. Third, relative strength versus the market. This is where new traders really can start to level your game up. Ask one simple question. Is the stock outperforming the S&P 500? Stage 2 stock leaders do 3 things. 1, they hold up when the market pulls back. They make higher lows while the index chops, and they break out before the market does. Strong and strength leads, weakness follows. The other aspect to the Weinstein scan is the volume expansion on the breakout. This is the confirmation. A real stage 2 breakout is going to have breaks above resistance, right? So resistance becomes support, and it's going to have above average volume. Volume will tell you the story. Institutions are getting involved. This isn't retail noise, and the move has fuel. There's a catalyst. There's winds behind it to push it up. Low volume breakouts fail more often than they work. So how can you, as a swing trader, use the scan in real life? Well, here's how you fit this into a weekly routine. Run the stage 2 scan after every market close. Build a watch list. These are not going to be instant trades. Just because you build a watch list based off your scans does not mean that trade is going to be set up for tomorrow. And I'm going to show you some examples here in a minute. So build a watch list knowing these are not instant trades, right? You have to see if the chart develops. You have to see if the chart validates your trade thesis. You can start and place a trade once that chart validates and your entry price is established and everything else lines up. But you got to mark your key breakout levels and map out your trade thesis, and you wait for price to come to you. You don't chase price. Wait for price to come to you. If it doesn't come to you, then it wasn't meant to be. If you do this, you will not be forcing trades. You are preparing. The scan does not mean you're going to buy everything. It means these are the only stocks worth my attention. That mindset alone is going to drastically improve your results. So what are some of the common mistakes that I see new swing traders making? They buy extended breakouts. They get in way too late. They've missed the bulk of the move, right? That stock is now starting to get into stage 3. It's topping out. That's not when you want to be buying in. You ignore the overall market context, right? And you have to make sure that you're trying to trade stage 2 stocks during a stage 4 market. If the entire market is headed into a stage 4 and you're trying to trade stocks that are stage 2, those stocks will probably still hold up, but you may not get much of a move because there's still downward pressure on everything. And last, the other issue or the other mistake I see new traders making is you confuse volatility with opportunity. Yes, we can make money with volatility, but it's very hard to trade when you're only trading volatility. The scan is just a filter. Execution and risk management absolutely still matter. So let's take a look at a couple quick charts because these are from a stage 2 scan. So we have Pathward Financial. And if you're just listening to this podcast audio, there is obviously a video version, and we will also put this up in the YouTube channel. I will put a link to the YouTube channel in the podcast. So you take a look at Pathward Financial. It has been in this channel pattern going back to November of 2024, right? It finally gapped up here. No idea why it gapped up because it wasn't earnings, but it gapped up nonetheless. And it's been in this channel pattern since November 24. So this is a very clean pattern. What do you have going on here? You have a breakout right here at the $85, $86 level. So this qualified on the stage 2 breakout scan because it's starting to break out. So you take a look at some of the details on here. You have earnings in 88 days. What does that mean? It means that we have almost a full quarter of trading opportunity. If everything lines up and I decide to take a position in cash, I have 88 days for this trade to really give it some time. Now I don't have to. If it hits my mark in a couple weeks, I can be out. But this gives this trade plenty of time to develop and allows me to get the most return out of this trade. Remember, when we are setting up our swing trades, for me personally, what I do, and you have to set up your own system, is I want to keep my losses at 3 to 4%, 4.5% max, right? Because I want my winners to outpace that, right? I need my winners to get 8, 10, 12, 14% on the trade, right? As long as my winning trades substantially outperform my losing trades, I'm going to grow my portfolio. So cash could be a very good opportunity to look at with plenty of runway before earnings. So that's going to go on my watch list. The other one that could be an opportunity is Coca-Cola. Coca-Cola has been consolidating and going sideways, a little bit bigger range, not quite as clean as cash, but The range has only been $65 up to about the 73, 74. So still a fairly tight range in terms of dollar amount. The Coca-Cola is officially breaking out above the $73 level, which is huge for Coca-Cola because it doesn't move a whole lot. So you've got this breakout going on. With that breakout, you do have earnings coming up in 10 days. So for me, I am putting Coca-Cola on my stage two breakout chart list, but I'm going to wait till after earnings and see what happens and see if the opportunity is still there and that the stock doesn't get away from me from an entry price point. So these are a couple of examples of stage two, Weinstein stage two stocks getting ready for breakout, or actually have already started to break out, that would qualify and did qualify on the scan. So hopefully those examples help to give you a little bit of insight. Now, how do we use this inside the DTA community? Well, inside the DTA community, we run stage two scans every week. We break down real charts. We identify which breakouts are actionable, and we manage those trades together in real time. So you don't just learn the concept, you see how it's applied. So if you're tired of guessing, tired of chasing, and you want a repeatable swing trading process built around proven concepts like the Weinstein Stage 2 breakout scan, come join us inside the Discipline Trader community. You can test drive it risk-free for 7 days, see the scans, see the chart, meet the group, meet the community, and learn to trade management and learn a system that you can build for yourself. The link is in the show notes. And remember, the goal is to trade more. The goal is to trade better setups. I'll see you in the next episode. Until then, have a disciplined week.